Good morning, everyone, and thank you for joining today. I'm very excited to be here on the 10th anniversary of this prestigious conference. In particular, everyone has made a joke about the weather, so I'm not going to mention anything joke-wise around how cold it is. However, as a Singapore resident, it's very nice to be in Hong Kong during the winter, generally speaking. So RBC is proud to be a major sponsor of this year's event, and we want to join all of you in celebrating the 10th anniversary of this conference. As Canada's largest bank and among the largest in the world by market capitalization, we have a diversified business model with a focus on innovation and providing exceptional experiences to over 17 million clients around the world. The strength and stability of RBC and the importance of the Canadian and global financial system is reflected in our inclusion on the list of globally systemically important banks. We're one of North America's leading global wealth and asset managers. We're #1 in Canada from a wealth and asset management perspective, #6 in the United States, and now the 3rd largest wealth manager in the United Kingdom. In Asia, our expertise spans global wealth and asset management, global markets, and investment banking. From our offices in Hong Kong, Singapore, Tokyo, Beijing, Australia, and Malaysia. Our wealth management footprint in Hong Kong stretches back to 1969, so certainly not as old as Manulife, but we're getting there slowly. And today we're proud to be the only Canadian bank with a full-service wealth management and private banking offering in Asia. From our offices in Hong Kong and Singapore, we serve clients in 8 core markets, including China, Hong Kong, Taiwan, Singapore, Indonesia, and the Philippines. And when clients choose us as their wealth management partner, they benefit from our global financial stability and the strength of our institution. Our success comes from almost 100,000 employees now who bring our vision, values, and strategy to life so we can help our clients thrive and communities prosper. And in an era of unprecedented and rapid change, RBC is building an innovation ecosystem that empowers our clients, advances businesses, and supports our communities. Examples include RBCX, and you'll hear from our colleague in Canada, our technology and innovation arm, which helps tech companies scale and make an impact by connecting them to the right people, ideas, and financial solutions of one of Canada's largest banks. RBC is also harnessing AI for quite a while, backed by Borealis, which is a world-class AI research center that uses the latest in machine learning capabilities to solve challenging problems in the financial industry. In addition to growing the business organically by investing in innovation, RBC is going through key acquisitions. The Canadian Minister of Finance approved our acquisition of HSBC in Canada just before Christmas, enabling RBC to add a complementary business and client base in Canada and to position RBC as a bank of choice for commercial clients, private banking clients with international needs, newcomers to Canada, and affluent clients who need global banking and wealth management capabilities. We also completed the integration of Brewin Dolphin, a wealth management firm with over 30 offices in the United Kingdom, Channel Islands, and Ireland in 2022, which did make us the 3rd largest wealth manager in the United Kingdom. With extensive experience, a focus on business, and a long-standing commitment to our clients, we're well positioned to grow and continue to serve the complex needs of high net worth and ultra high net worth individuals here in Asia. All of that brings us to the first panel today. Before we start, it's my pleasure to introduce the moderator, my esteemed colleague Iggy Chong, Head of Enterprise Private Clients at RBC Wealth Management. Together with our senior leadership team, Iggy supports clients with needs across business lines and cross-border interests through our One Bank offering, ensuring their seamless navigation across the breadth of our organization. He works closely with families and individuals to bring them the best that RBC has to offer, especially out of Canada, where our capabilities include our large retail bank, commercial bank, capital markets, investment banking, and asset management, just to name a few. Iggy, over to you.
Good evening to our friends in Toronto online. I want to acknowledge Madeline first with the salute of Live, Live, and Prosper. I'm super excited to be here. I'm passionate about Star Trek, but I'm also more passionate, even more, about the topic. Maybe I can ask my panel members to make their way up here and let me introduce what we're talking about. But I'll just ask Gerald and Chen to come up here, please. And then do we have Alison and John on screen yet? So topic is business investment in Canada. And to preface that very briefly, because we actually have to shorten this session, but preface it very briefly. Canada is widely acknowledged as a nice place to live, a nice place to visit, a nice place to go fishing, a nice place to retire, and a nice, but actually or great place to get a good education, a good place to raise a family. But today I want to bring us to the next level, to really put out the case, make the case that Canada is a great place to do business. And to accomplish that, this bold task, I am super excited with this incredible panel that we have today. Now, normally, a moderator is supposed to introduce the panel and establish the credibility of the panel in order to meet the objective of the panel. This is going to be an extremely easy task for me given the accomplishments of this panel. So I'm very, very happy to do that. Do we have John and Alison there? Yeah, great. Okay. So let's get started. And of course, at the end of the panel, if there is a bit of time, we will have some time for questions from the audience. But we'll have to play it by ear because we are running late. Okay. So what I'm going to do is, and I should mention that when I say investing in business, we're investing in business maybe for different objectives. And one objective is investing in businesses for yield, that is to say, creating recurring revenue. Many investors think about Canada and invest in real estate just for that purpose, and that is indeed a good purpose, but I'm making the case that there's more than that, you can invest in business in Canada for recurring, stable revenue, which I'd say is much needed in the complex and uncertain world that we face today. So that's one purpose of investing in businesses, but the other purpose is also investing for growth. And the case that we're making is that Canada has incredible research that can be commercialized, that is being commercialized, and so in this panel we'll address the objective of investing in businesses for growth as well as for income. Okay, so it's my great pleasure, first of all, to introduce Gerald Ma, on my far right. Gerald is Executive Committee Member and General Manager, Corporate Business Development of Cheung Kong Asset Holdings Limited. And Cheung Kong Group, of course, is a powerhouse Hong Kong conglomerate that needs no introduction. Gerald is a veteran of the group and is responsible for the finance and management of a number of subsidiaries, as well as being non-executive director of 2 Hong Kong-listed real estate investment trusts. And having had the pleasure of knowing Gerald for a number of years, I know that he brings an incredible energy to everything he does, including being very passionate about Canada. Dr. Chen Fong, to my right, I'm very honored to have. Professor Emeritus, Faculty of Medicine at University of Calgary, sits on the global board of CDL, the Creative Destruction Lab, one of the highly successful incubators, the most successful incubators that takes the incredible research from Canadian universities and takes it to large-scale commercial success. He is also a prominent and sought-after investor and mentor. For his achievements and contribution to the advancement of medical technology in Canada and for his philanthropy, he was awarded one of the country's highest honors, the Order of Canada, in 2016. Alison Nankivell, just a wave to Alison. Alison is Senior Vice President, Fund Investments and Global Scaling. She leads the indirect investments of BDC Capital, which is one of Canada's largest venture and growth equity fund investors with more than $5 billion of assets under management. She is also responsible for BDC Capital's strategic initiatives, including ESG and the global expansion strategy for the bank's most high potential direct investments. Alison is no stranger to Hong Kong and Asia, having worked here in Beijing and Hong Kong, and to top it all off, she was fluent in Mandarin. And my colleague John Ricktager, if you could give everyone a wave, John. John is part of RBCX, which, as Cam mentioned, is RBC's Innovation and Technology Division, and joined us after holding various roles in corporate development, revenue operations, and go-to-market strategies at select growth stage technology companies. John manages the fund finance and investment management arm of RBCX, while specifically leading RBCX's direct and venture capital fund investments in Canada. And you'll find that John speaks compellingly about the ecosystem in Canada. Okay, so time to get down to work. Let's, if I may ask my dear panel, to tell everyone about what you do, obviously, as important about your purpose, the purpose and why you're collectively so passionate about this topic. And let's start with Gerald, if I could ask the first question. Why is Hong Kong in Canada?
Thanks, Eki. Good morning. Well, the CK Group started as a property-centric, property-focused company in the 70s in Hong Kong and benefited a lot from the long-term rising trend in the Hong Kong property market. But having seen the volatilities in the real estate market during various economic cycles, it got us thinking, and the group started to think about how to improve our predictability of earnings while we continue to grow. So we adopted a corporate vision, advance without foregoing stability. But how do we create a resilient company with a solid balance sheet and a predictable income stream that can make us reliably profitable during good times and bad times? So fast forward to 2024, we started a journey in the late 80s and started to invest globally in different sectors in different countries. And now in 2024, I'm pleased to say that the CK Group now has businesses in over 50 countries and with a very strong recurring income base, and many of which are counter-cyclical by nature. In Canada, being a developed economy with a lot of natural resources, and under a common law system, a system that we are very familiar with in Hong Kong, is one of the places we found attractive to invest capital in. As for what I do, I guess I can say I'm one of the spiders or super connectors in this big CK global web, helping to make sure that all the dots are connected to the core, making sure everyone is working together for our common group objectives. Now, I started out as a banker and joined the CK family 28 years ago. So I'm one of the old furnitures now. I went from running property projects in Hong Kong, Singapore, and Canada, Vancouver, the expo site, to managing finance and investments now, and as well as being accountable for the performance of certain businesses across the group. I like to say I'm also a bridge or ambassador between Hong Kong and Canada, as I am a third-generation Canadian. My grandfather went to Canada before the 1900s, became a Canadian in 1905. My father was born in 1918 in Strathcona. They came back and settled in Hong Kong in the 30s, before World War II. I was born in Hong Kong, returned to Canada for high school and university, and now I'm back since the 90s. My immediate family and extended family actually can be found in Hong Kong and almost every province in Canada. So I like to say I was born in Hong Kong, but made in Canada, and hopefully for the better, and returned to build a career in Hong Kong. As for the purpose, why I do what I do, I would like to say at CK I have the ability to positively impact the lives of many colleagues and stakeholders across cultures and many different sectors. And the group has given me an opportunity to create a collaborative environment. And in this increasingly divisive world, it means a great deal to me. I believe we are more similar than different, and building one genuine relationship at a time, that is my purpose.
Fantastic, thank you. And what a great multi-generational story. You can imagine the power of the network that's already established with the many graduates and alumni in Hong Kong from Canada, and more students going to Canada. Turning now to you, Chen, when I first met you too, was so inspired by your story. You were born and raised in Shanghai. You went to Canada seeking opportunity, found a lot of it, and you stayed. So really love to let the audience hear more about that and why you do what you do. Chen, please.
Well, thank you for including me, Iggy. Really appreciate it. So I'm a medical doctor. I was in Canada, and I moved up in the ranks too fast. I became the professor, chair, and got sucked into the administration vortex, and got really bored. So I drifted into the innovation space and got a bug. Okay, so Iggy asked me the questions. You're comfortable, and why are you still doing all this stuff you are doing today? And so if I can share with you, that I can go on for hours trying to justify my existence. But the bottom line is that, number one, I'm heavily influenced by a person who's a mentor to me. And he, in last 10 years of his life, he gave away his entire net worth, which is, a couple $100 million. And I helped him through that process. And it really influenced me how, we all need to contribute. And but I analyzed it, and I thought what he did that doesn't resonate with me is that he did not get to see the fruits of his efforts. So why don't I start earlier and to, there's nothing better to see the fruits by giving money to all these young entrepreneurs and help them flourish. And, I can live vicariously through their journey, if you will. Okay, so that really excites me. And the second thing is I recently found a quote that really resonated with me. It basically said, to make your present better, you got to focus on making your future bigger. Because I have all kinds of friends who are industry titans, and they are retired, and they got wealth of experience, but they're playing golf every day. Yeah. So I'm pitching all my friends is, why are you playing golf every day? It's not that your game's getting any better, okay? So you have all this wealth of experience you can share with the young people and help them, okay? And or you can fund them, and you can live through their experience and make the future much bigger. So that's basically a long-winded way of me justifying my existence, but my wife thinks I'm just a deal junkie. Okay, so. Yeah.
What a great existence, Chen. It's inspiration. So turning over to Allison. Allison, you lived and worked in Asia quite long, and now you're in Canada championing the cause of business and innovation growth, both BDC and at EDC, where you were, and both of which are crown corporations. I think that's something also that wanted to play out here, that Canada has great support from some incredible crown corporations and other government sources for supporting the ecosystem. Please share a bit about your journey, your purpose, and also what you do, what BDC does. Thanks, Allison.
Thanks, Iggy. BDC, as you said, is a Crown corporation, and all Crown corporations in Canada are unique in the sense that they are very profit and private sector oriented, but they are also very focused on a mandate, and the mandate in this case is really about helping to create prosperity for Canada. In the case of Export Development Canada, where I previously was, it was focused on exports to Canada, from Canada to Asia, to other global markets, to really help Canadian companies scale. And by doing so, increase their sales, increase their competitiveness, and contribute to the prosperity of Canada. In the case of BDC, the Business Development Bank of Canada, where I am now, it's focused much more on the smaller end of the market, small and mid-sized businesses in Canada. And the piece I worked for at BDC Capital is the risk capital subsidiary. And it's very focused on investing in Canada's leading innovation-focused companies. So that's companies at all stages. As you mentioned in your introduction, we're the largest venture capital investor in Canada, focusing on both early stage as well as growth and later stage companies. And our focus is to really ensure that we're providing the risk capital so that those great technology companies that Chen was talking about have the chance to really have the risk capital to scale and stay Canadian owned as they grow and need capital from a range of different investors. So we work alongside the private sector, work with venture capital funds in Canada, other global venture capital funds. We work with corporates who are investing in these startups as well. And across all sectors, life science, ICT, clean tech, as well as niche areas like agri-tech or resource tech. And it's incredibly important to recognize that Canada is very much an understated ecosystem. As from an innovation point of view, we have a lot of areas of strength. And, BDC, as you were noting, has a considerable portfolio already, about 250 direct investments. Through the funds we support, we're active in about 70% of the funds in Canada. We have probably another, I would say, 1,200 companies that we're supporting in Canada. So it's a considerable footprint, and one where I think all of us who work at BDC are very passionate about seeing those companies scale, because they do, as Chen said, represent the future prosperity of Canada. And they do, in many cases, represent the best of world-class competitiveness in the areas that they operate. We have tremendous strengths in a number of these areas, and I do think that Canada, is an under-recognized ecosystem for both innovation as well as for the high potential, market in which to be investing your capital.
Thanks very much, Alison. And I know you're also moving on to a new role, just as exciting, and I'm afraid we won't have time to get into that due to time constraints. But just to highlight that, we're super excited to hear from you in the future about that as well. And what you've heard from Gerald, Chen, and Alison so far, we'll go into a bit more detail with some specific examples, some stories, and some data that we'll share. And now John, my colleague John Richtega, as Cam mentioned earlier, at RBC we have a purpose, and the purpose for sure is to see clients thrive and communities prosper. And John, the significance of RBCX, the reasons that RBC started RBCX, I know when we were talking you were very passionate about that, so please tell us about that, a bit about RBCX and your purpose, John. Thank you.
Definitely. And I appreciate the question, Iggy. Thank you very much, and thank you for having me. As a starter, I never imagined myself someone working for a large financial institution or a large corporation. For the past 5 years of my professional career, I actually was a technology operator, most notably at Shopify, building out their enterprise business at Shopify Plus. And the reason why I decided to jumpstart a career in technology, candidly, where a lot of my peers were focused on investment banking or consulting, was because I saw the fundamental impacts that technology was having in society in two main ways. The first being in building new innovation and bringing new innovation to market. And the second in being disrupting traditional business models and ways of working. And so by positioning myself in a technology lens, I figured I'd be able to work with the best and brightest minds on the most cutting edge innovation, but also in equally helping more traditional businesses understand how to adapt their offering and platform for a digital first world. And I think that really leads well as to why RBC launched RBCX and ultimately why I joined RBCX about 2.5 years ago. When I was raising capital for my prior business, I was working with a lot of the big banks in Canada and was really taken aback as to how limited they knew with respect to the tech ecosystem at large. I was getting offered debt products that were cash flow and profitability based loans. And as most people can appreciate here in 2018 and 2019, most tech companies were being built for top line revenue growth. But the more interesting piece is if you think about the business of a bank, they typically built their businesses by providing traditional debt or leverage to cash flowing based companies. And tech companies are fundamentally different in that they're cash burning, pre-profit, and they scale by equity capital. So there's also a bit of an equity kind of capital structure mismatch. And so though RBCX is a natural evolution and is a new platform, a new brand, a new offering, it's a huge opportunity, as Cam said, for the largest bank in Canada and one of the largest in North America to double down on building an offering that's going to be positioning Canada and RBC for the long term. And one thing I'll note is this isn't something that's exclusive to the Royal Bank of Canada. What we've seen over the course of the past 3 years is we've seen every single tier one bank in Canada invest heavily in their own technology and innovation banking capabilities, especially after the downfall of Silicon Valley Bank, given the fact that we all know how large of a role technology plays in the Canadian economy as well as in the global economy. And so I think that's a long-winded way of saying, my passion, my purpose. My passion in this case really is being able to work with the best entrepreneurs and the best early stage investors in helping mature Canada's innovation economy. And my purpose now really is helping RBC build RBCX into the premier partner for Canadian entrepreneurs, really for the long term.
Thanks very much, John. I don't know if we want to show the video now or later, or...
If it's available and ready to show, let's do it. Otherwise, Ziggy, I'll throw it over to you to continue.
Yeah.
X. What is X? It's untapped potential. It's what's possible when the bold unite. Introducing the new RBCX, bringing innovators together from across RBC to help Canada's tech trailblazers compete harder, grow faster, and drive lasting change. Our 4 pillars: banking, capital, platform, and ventures, combine to back bold ideas, founders, and companies across all stages and sizes. So, what is X? It's what we can achieve together when deep expertise and daring ideas collide. RBCX. We power bold.
Some specific examples, and we actually are very time constrained, so I have to apologize to the audience. I don't think we have time for questions, but really wanted to showcase and demonstrate what we've been talking about so far. So we'll go rapidly in order here. So Gerald, if you could explain the investments, the businesses that you have, and more importantly, maybe the rationale.
As I mentioned earlier, Canada's wealth of resources and the common law system gave us a chance to put money to work since the 80s. Yeah, so to date, the CK Group has about 23 billion Canadian dollars worth of total investments into energy, infrastructure, life sciences, resource companies employing close to 12,000 people. So the biggest of which Cenovus Energy is the second largest oil and gas producer in Canada. If we can, it's a good way for us being a global conglomerate to hedge against commodity risks. So we certainly took advantage of the rich natural resources in the country. So infrastructure, so Reliance Home Comfort is the largest home equipment, so boiler, HVAC, aircon, leasing company in Canada. We also have a series of pipelines and infrastructure assets in Alberta and Saskatchewan. If you are one of those individuals who like to park your car at the airport and then take a flight, then you will be using our facilities at Park and Fly as well. We do have wind farms in BC and power plants in Ontario, Alberta, Saskatchewan as well. And these series of investments were made in the last, I would say, 20 years, and they are mainly annuity and steady cash flow deriving businesses. So in the last 10 years, we certainly leverage on Canada's expanding research, healthcare, and life sciences capabilities. Not just for generating returns in Canada, but actually we've been able to supply great Canadian products to our retail and beauty, health and beauty network, 16,000 stores in 28 different markets. So Santé Naturel is a company in Montreal, and the Adrian Gagnon products, you can find them, many of them available in Watson's in Hong Kong. Wax Pharmaceutical is a Vancouver-based research company. We're trying to develop new ways for treatment of pain. So apart from investments in Synovus, you will notice that the rest of the businesses are very much counter-cyclical and providing a steady income stream regardless of economic cycles. So like most of your established clients, the capital preservation is very important to us. So I believe that you can play a video for Reliance, I think is a corporate video / commercial.
Home is a place to live, to love, to laugh, and feel safe. A place to gather, or to be alone, where it's warm when it's cold outside, and cool when it's hot. Home is where everything matters. Home is where comfort happens. For all your home comfort needs, call on Reliance.
We create this place called home.
So for 30 to 80 Canadian dollars per month, we would lease your boiler or HVAC, and 24/7, if it breaks down, we come to you, all parts included. So you all know that if it breaks down, you call somebody, it is $300 gone before they come in to fix your boiler. So that's what we do in Canada, and we do plumbing now as well, so thank you for your business ahead of time.
Thank you. So some great themes there, right? The safety, the feeling of home, reliability, but also generates cash, right? It's money making, lots of good money making. So there's that yield theme I was talking about, and Canada is very good for that, but it's a lot more. So Alison, over to you really to tell us a bit about the growth story, and then we'll get to venture at the end. Again, I know you've got an example of investments that have been made in growth, revenue-generating companies which are continuing to scale. Alison, over to you.
Yeah, thanks, Iggy. I think there's quite a lot of participation, as you may know, of Asian investors in a lot of Canadian companies. Certainly, for years, we've seen family offices, corporates in Asia, beyond CK Group, who've been very interested in focusing on investing in the innovation of Canadian companies at all stages. And I think one of the things we forget is that there's a lot of cash-generating, cash flow positive, innovation-focused companies, as John was mentioning, in addition to a great community of mid-market companies that have just been out doing international markets for a long time in Canada. And that part of the business, which we would call sort of our mid-market activity at BDC, is about providing both lending, where we would have about $56 billion of lending to our clients, about 100,000 customers, many of them exporters. In addition, we have quite a lot of equity investments into those companies as well. We have groups such as who started off as more venture-oriented groups such as AvidBots, who many of you in Hong Kong may be aware is a leading sort of robotic self-cleaning machine that is used at the Hong Kong airport. This is a group that was started with early stage venture capital group. A number of them in Canada, now has actually Asian venture capital funds in it and has been rapidly expanding in Asia. Or groups like Aquatic Informatics, which is a water monitoring technology company out of Vancouver, has been very profitable, has a significant practice of clients in Asia, including Thailand and other parts of Southeast Asia, providing water quality monitoring as well as analytics to help predict floods and other issues like that in urban centers. We have people like Earthos, which is a company that, very prominent Hong Kong family office is invested in alongside us and others, which is a remarkable early stage clean tech company that has grown quite rapidly because of its unique technology of taking basically plant waste and transforming it into compostable plastics for packaging to really deal with the single-use plastic issue that globally everybody is facing. We've seen quite a lot of companies that I think are growth stage, that are enterprise software companies. Many of them, again, really at that growth capital stage, that are getting private equity capital, are quite active in a number of markets, including in Asia. And so as an investor like BDC, while we are working on at the early stage, and in fact have been fundamental at setting up a lot of the ecosystem in Canada in terms of putting money into emerging managers, helping create that next generation of excellence, both in fund managers, but also in companies. We're also very, very active, as you said, on the growth side. And I think that's something that's underappreciated, that Canada has a lot of very below the radar, very successful cash flow positive companies across the country. And they have been very, very, I think, successful in both entering the US market, the Europe market, as well as the Asia market, not just in sort of emerging areas such as biotech and climate, but just in logistics, areas of transportation, engineering, as well as just traditional areas of manufacturing where they might be very deep specialty in certain segments that are just critical parts of the global value chain for areas like automotive and others. And so, I think it is important to remember that the BDC is a good partner, as are many other groups in Canada in the private sector as well, to help Asian investors understand that there's quite a rich offering of mid-sized and growth-oriented companies that really are out there seeking capital because they are looking to expand into new markets, to do mergers and acquisitions. And while they work with the banks and they work with other groups, having strategic partners who can help you access, as a thoughtful investor, new markets is really attractive. And I think there's a great potential for synergy by having more companies and more investors in Asia look at this segment to really provide their expertise to help these companies scale.
I'm here to meet with James Larson, CEO of Easing, a company and an entrepreneur dedicated to redefine sustainable energy. We're here at Easing. You're dreaming of at least contributing to a carbon-free world.
We have a massive carbon problem. Everyone is aware of that. We're really going to need a massive amount of renewable energy. But the thing is that when we get to really high penetrations of renewable energy, the traditional types of energy storage technologies to balance it become inadequate. That's why there's such a great opportunity for Easing and our storage technology, because it will necessitate long duration storage assets capable of bridging multiple days of low or no generation.
Why zinc? Why batteries? And how do you do this?
Zinc has an incredible set of electrochemical properties. And when our founder was looking at different types of materials to be an energy carrier, like a fuel, zinc it outperforms on all of the major dimensions. But there's some other really significant benefits. Number one is it's very low cost. Number two is that it's quite a sustainable materials. About 40% of the world's annual zinc consumption comes from the recycling markets. So we're not having to necessarily harvest a lot of zinc out of the earth to provide it. And of the zinc that does get harvested, it often piggybacks off of other metals that are already being mined, so its impact is much less.
How can this new technology, when you and I will be able to use it, or the industry will be able to use it, this will make a difference and an impact how for Canada?
Anyone who's using a diesel generator or something of that nature as a form of backup power, right? So think of data centers or hospitals or telecommunications towers. We can be a clean alternative to that. The second would be remote applications. So think of remote mining operations like in Northern Canada or our Indigenous communities. You know, Canada has over 300 truly remote communities that are powered entirely by diesel.
Have you quantified the potential contribution of e-zinc into reduction of GHG?
It's very hard to forecast, but we are one of the winners of Breakthrough Energy Solutions Canada. One of the criteria of that competition was to prove that we had the ability to reduce the world's GHG consumption by 0.5 gigaton by 2050. We passed that criteria, so I think that we have an opportunity to play a very important role in decarbonizing our world.
So hopefully we'll have a bit more time for what Alison has to say later, and we're very time constrained, but I really want to make sure that we have time, so don't rush on this, please, for the next two speakers, because now we'll get into technology a bit more deeper. And Chen, when we spoke, you talked about an example, and you also emphasized deep technology as something that is distinctive about some of the opportunities in Canada, and your personal experience. So love to hear more about that. Thank you, Chen.
There's no time for me to think it over. I can feel this power breaking through. There just must be something in the water. I can feel it shift and start to move. Just keep on going, running, staying strong. Gotta keep my head up when the road is long. Though there may be mountains, there are hills to climb. I keep pushing through and rolling on, rolling on.
As you see, this ultrasound machines, you guys all know ultrasound machines, it's a big box. And we have shrank that thing down to the size of an iPhone. Okay? And it's wireless, as you can see on this video. The founder is an immigrant, and I funded his first company, and became a real good friend. It was a great journey for me, and this is like typical Canadian companies. We build it up, we sell it, and he made tons of money, and now he started a second company. So what we call serial entrepreneurs, yeah? And lots of them are in Canada. And so the reason I'm telling this story is to illustrate a point. You know, Iggy asked me to show a case, and I have about 150 investments like this. So why did I pick this one? It's really to illustrate a point of how investing in Canada is a little different from the United States. Okay? So first of all, there's a lot of deep tech. The Canadian government has spent a lot of money in research with for the universities, and a lot of good technologies come out of that. And it's a new culture now to commercialize those technologies. So this is a fine example of that. It's a deep tech. The beauty of deep tech investments is that they don't blow up as much. Okay? And if they blow up, you still got lots left because the asset is worth something. Okay? So this is a great Vancouver company. It's growing 30% a year. It's cash flow positive, and we raised around 60 million Canadian dollars to get to where we are today. Okay? Now we have an American counterpart who has spent over $1 billion, to build this thing, and our quality is far superior. But after $1 billion, okay, their revenue is about 30% higher than ours. Yeah, and as I look at the last quarter results, they made $15 million, but they lost $27 million doing it. Yeah, so the difference between the two companies is that we spent 60 million, they spent $1 billion. Okay? And of that $1 billion, that's 200 million came from a Chinese conglomerate who we invested about 5 years ago. Okay? And they list on the New York Stock Exchange, and the market cap right now is $200 million. Okay? So if you invested 200 million 5 years ago, and now the total market cap is 200 million, you're not too happy. Yeah? So this is the fundamental difference between a Canadian deep tech company and the American. Canadians are not so great in telling stories and pounding the chest and say, we are the greatest in the world. Okay? And that's just seems to be not the national psyche. And but we have really good companies, solid growth. It's no different from all these Hong Kong entrepreneurs building a manufacturing facility. You watch your bottom line, and you build a real business. So if you're looking for a real business, come to Canada. We have lots of them, okay? And the founders and the board treats your money as their own money, and we go forward together. So that's why I picked this example.
It's a great example, Chen. Thank you so much. And if we have time, we'll maybe draw some comparisons around the U.S. To later. Gerald, if you have some comments on that. But I just want to go through now with data, because we've been talking about stories, talking about examples. And John, you've compiled some data for us. I don't know if you could spend no more than 7 minutes. I think that's all we have for your section, with maybe combining all the slides that you had, because we had 2 sets of slides. But
No, don't worry, I appreciate it. Thank you. And there's just a bit of echo or feedback on my side, but we'll start off with people ask me a lot here, why should anyone invest in venture capital? Or why should I allocate a portion of my private equities allocation to venture capital? And the answer that I give to that stayed the same over the course of the past few years, which is venture capital is the highest performing asset class if you can invest in the best companies and funds. And the most important word to highlight, underline, bold there is the word if. And I'll get back to that in a moment. McKinsey Consulting published a report in 2022, and they looked at the past 10 years of venture capital performance, or past 10 years of private market performance. And they found that in 8 of the 10 past vintage years, venture capital performed the best of any private market strategy. And that's in comparison to secondaries, private equity, infrastructure, and growth equity. And so when you look at that on a private to private basis, venture capital definitely tends to outperform. But what's important to also consider is, how does venture capital perform to other public market equivalents or public market indices that are fully liquid, like the NASDAQ composite? And what you'll see over the course of the past 10 years is the upper quartile venture return. So the top 25% of venture capital funds have produced a strong illiquidity premium relative to the NASDAQ composite. And that's incredibly important, again, as investing in private markets, given their illiquid asset classes, there needs to be an illiquidity premium to justify putting capital to work privately versus in a fully liquid public market indice. But what's very interesting about venture is the dispersion in venture is the widest amongst any private market strategy. And the median return in venture doesn't actually surpass the NASDAQ composite. And the reason why, and what I mean by that when I say kind of return dispersion, is you could invest in a venture capital investor or manager or fund, and they could have produced you a 30% net IRR, internal rate of return, over the past 10 years, which would have produced a significant illiquidity premium relative to the public markets. Or you could have invested in a manager that maybe only generated you 5%, and therefore that wouldn't be deemed a very successful investment. The reason why there's such a wide return dispersion in venture unlike what exists in growth equity and buyout, is because venture is subject to what's called the power law. And the power law in this instance, meaning 80% of the companies in venture capital typically generate, 20% of the companies typically generate 80% of the returns. And so if you're an investor or founder building or investing in that 20% of companies, if you can do that, your returns will prevail. But unfortunately, for those who can't, that means that the returns won't necessarily justify the asset class. So over the past 4 years, I'll kind of highlight the chart that's on the screen here. We've obviously gone through a very tumultuous period in the world. From a capital allocation standpoint, even on the private and public side, we've gone through a peak bull market in 2021 to a very sharp down market in 2022. And what I thought would be interesting was to show how has the venture capital ecosystem essentially responded to prior market downturns, most notably the global financial crisis in 2007 to 2009. And so what this chart shows is the 3 years leading up to the global financial crisis, as well as the 3 years following. And the metric that's core to this slide is what's called top quartile, so the top 25% of venture capital, what's called net TVPI, or net total value to paid in capital. Think of that as the total value of a fund or a venture capital asset relative to the amount of investment that's been called or invested from that fund's investors. And so for the 3 years leading up to the global financial crisis, you can see that the top quartile net TVPI on average was 1.92x. So that's for $1 invested, you would have received $1.92 back. Fast forward 3 years, for the 3 years following the global financial crisis between 2010 and 2012, that 1.92x average got ballooned up to 3.84x, essentially got multiplied by 2 times. And those are 3 of the most prolific venture capital performing vintages on record. And the reason why that was the case, really because you had valuations that were incredibly low, so great for investors. You had very limited capital coming into the venture market, given most people weren't necessarily allocating alternatives at that time. And you had business building that was very pragmatic and capital efficient and operator driven. And the type of founders that were building businesses in the global financial crisis were incredibly special. And so what's fascinating is on the right-hand side, those are all companies that were founded in the global financial crisis between 2008 to 2010, which I'd like to think are all household names for the majority of people in this room right now. And what gets me incredibly excited is if you then look at, and when I think about the vintage years of 2024 to 2026, I think these have the opportunity to be some of the most prolific venture capital vintages that we've seen on record. And the reason why that's the case is if you look at public software valuations, they're trading right now from a software multiple perspective below the 10-year median. So that means it's a great entry price for investors. When you look at then fundraising to venture capital, 2023 had levels that was equal to 2015, which is considered incredibly low, which means we're not overcapitalizing the industry with fresh new capital. When you look at it from a public market perspective, the NASDAQ composite was up 36% in 2023, and a lot of that was driven by big tech and AI. And when you then look at monetary policy and macro factors like interest rates and inflation, having expensive capital, given interest rates are relatively high, also makes sure that capital allocation is incredibly prudent. So this chart, I think in 15 years, I'd like to think that the downturn of maybe 2022 to 2023, the years leading up to that, 2020 and 2021, may not be strong venture capital vintages, but the years thereafter, between 2024 and 2026, I think will be some of the most prolific venture capital vintages on record. Iggy, I know you mentioned, potentially going to the next slide, so I'm going to rip through this incredibly quickly. Some of these slides, essentially what we want to show here is why Canada, specifically why Canada over the US. And so the reason that this slide is important is the maturation of the Canadian ecosystem, not just in early stage technology companies, but in companies that have been able to raise a significant amount of capital, scaled enterprises, as well as those that have exited for over hundreds of millions of dollars. And so the chart before this, what it was trying to show was the return, the 10-year net IRR return for US versus Canadian venture. And so though the US market has had a higher return threshold than the Canadian market over this 10-year period, the Canadian market's made up 2 times the return. Our ecosystem's gotten a lot stronger. And to Chen's point and Allison's point and Gerald's point, I'll mention that's because of the talent and the ecosystem and what's actually getting built in Canada. The interesting part about this slide, quick to note, is tier 1 US and foreign investors are increasingly allocating more of their capital to Canada. So what this shows on the chart on the left is the percentage of actual total US VC capital that was invested in the Canadian market relative to the total capital that was invested in Canada that year. And so in 2022, you had roughly 50% of total capital raised in Canada had some sort of US VC participation, which is incredible. And the reason why that's the case, again, is the quality of our entrepreneurs and the quality of our companies. And so on the right-hand side, what you'll see here, it's a bunch of logos, but at the bottom, you'll see a subset of 10 sample Canadian technology companies, which have all raised over $20 million in venture capital financing over the course of the past 5 years. The next layer up is the level of Canadian investors that have since invested and seeded those businesses. And the layer above that, the logos are tier one US investors that then followed on those Canadian funds who invested in those same companies. There's two main insights to pull from this chart. The first is those are not, random unknown US investors. Those are globally recognized, established franchises that have been around for decades, like Index Ventures and Bessemer Venture Partners and Excel. The second point to note here is, if you have the opportunity to invest in, the right venture capital funds, you can get into very good companies very early relative to getting that Canadian exposure through a US fund. And I'll run you through the example of, if you're a Canadian fund in this case, investing at the seed stage at a company where seed valuations are typically hovering around $15 million, or you could potentially invest in a US fund that is following in on that investment, typically at the Series A, where the median Series A valuation is roughly $50 million. If a successful exit for both of those investors is to 10x their money, the Canadian investor would need a $150 million exit value from the $15 million valuation they entered. But the US investor would need a $500 million exit value from the $50 million valuation they entered at. And so to get that same 10 times return, the US investor would need a much higher exit value. And so that's why I think Canada is a huge opportunity for global investors to look at a portion of their venture capital portfolio or a portion of their private equity portfolio in terms of its ability to get good diversification from that. Iggy, maybe I'll pause there. I know I had a few more slides. I'm mindful of time, but I'll throw it over to you.
So can I just ask clarification, just basic one. So is one of the arguments that we can go in with smaller check sizes in Canada, and also that accessibility is better? How would you sum it up how would you sum up the words how would you sum up the data and the charts in, say, 3 sentences?
Yeah, so you're correct. I'd say, as Chen mentioned, Canadian companies are more capital efficient, therefore require less capital to scale. And therefore, as an investor, you'll make a higher return from needing less capital to be invested in a company. And what I'll also say is being able to invest in early stage emerging managers or Canadian funds is highly accessible. And it is a great diversification strategy when you look to build a venture capital portfolio that has young emerging franchises in tandem with your blue chip venture capital investors that most folks here would know.
Super, thank you. So we only have 6 minutes, but if I could ask Alison and Gerald, maybe the comment about, or to continue on this theme of comparing Canada versus the US, since we've gone down this road. Alison, just comments, please, from you.
Maybe, Iggy, something useful to join on to what John was saying is to remind everyone that in Canada, we have a national venture program that's sponsored by the government called the Venture Capital Catalyst Initiative. It's in its 3rd iteration. I actually came into BDC to set up the original program. And what's great about that is that we have a program whereby you can get a significant diverse exposure to a number of managers by investing in one of 4 fund-to-fund managers in Canada. There's HarbourVest, Kensington, Terralace, and Northleaf, who all have an allocation. And the program is great because there's downside protection from the government. So any first losses through those programs go to the government, not to private sector. But you're allowed, through participating in these funds, to get exposure to a wide number of venture capital funds in Canada. So it's a great, effective program for both high net worth and family offices to get into the venture market with some downside protection and a great deal of diversity in their exposure, and to really learn about the market. And those programs are still open, raising capital for their next iteration. So that's something that many of you might want to consider. And obviously, if you're interested in that, I'm happy to provide those contacts, because it's an overall program that we manage on behalf of the government, but it's been incredibly influential in scaling the amount of private capital that's come into Canada in an effective way, as I said, that gives real downside protection. So I just wanted to add that because I think it's worthwhile for those of you in the market who are really new to this asset class.
That's super, Alison. So thank you. We're starting to wrap up here, and we've covered a lot and tried to in a short time. But a takeaway, if you have more questions, you want to get deeper, obviously, please do come to us at RBC. If I could have the RBC colleagues put their hands up so you know who we could go to. Obviously, link up with any of us on LinkedIn. I'll, with Chen's permission, if I'll go to Gerald for the last comment and then see if we have time for maybe one question. Gerald, anything about comparing Canada, US? We spoke about market structure, competition. Anything you'd like to add about Canada versus US? Thank you.
Well, Canada, generally speaking, is less well capitalized and less competitive than the US, so it's easier to get in. It has certainly a more stable social and political environment, and is a more investor-friendly government. So those are all
Key
our
point there.
advantages.
Right.
Yeah.
Investor-friendly, there's of course, you know, there's a tax aspect and all that, but investor-friendly in the sense of, you know, having people like Alison helping, and how do you mean investor-friendly?
Well, there are less red tapes.
Right.
To go through when
Yeah.
you want to get approvals, when you want to dive into a particular industry. But if you really want a hockey stick trajectory for the venture that you have invested in, you really, Canada is also underpopulated. You really need to take that product and bring it to the global audience.
Yeah, the Canada as a launch pad, and of course we are saying, this is the theme of this conference, that we're not saying go to Canada and you know, leave Asia. It's all about the connectivity still. And we were actually going to feature some examples about companies that have, actually Chen or Alison mentioned it earlier, a company that basically started factories here in Asia, but based on technology in Canada, and now exporting back to Asia. So I see that point, Gerald. So I think I really wanted to get at least one question from the audience. We've got 2 minutes left. Anyone?
The question is addressed to Gerald. Given the current geopolitical tensions, have you put what kind of considerations you have, and what kind of actions you are expecting?
Well, our group is in 50 countries, so there's always some tension somewhere. And there's always businesses that are doing really well in some place and businesses that are not doing so well in another place for all sorts of reasons. So we're kind of used to it. But as I alluded to earlier, we do believe, it's not just my personal belief, but I think our corporate belief, we have more similarities than differences. If you have that in mind and you believe that to the core, then the way you approach as you go abroad and work with your partners, then you can always find common grounds. So we're continually looking for ways to invest our capital here and abroad.
Wow, awesome. So thanks for the question. Thank you, Gerald, for the answer. I hope this has shone a light on the opportunities in Canada across the spectrum, from yield, cash generating companies to growth and venture. It's about all the time we have, but in terms of follow-up, we do intend within Chamber to support more events like this, keep this super connecting going. Please watch out for that. And also for the other excellent panels during the rest of the day. And finally, I did commit to Jeff that I would want to mention another important event coming up in Singapore, the Asia Pacific Foundation's Canada and Asia Conference next month. So great opportunity to see Canada's potential in action there too. So thank you to my esteemed panel. Thank you all. Thank you.